I'm Judd Wolcott, and this video will discuss the IRS rules for reporting entertainment use flights. Here is the disclaimer that the IRS requires we pass on to you. And so now let's talk about these entertainment use flights on a company aircraft. There are two sets of IRS regulations for non-business use of company aircraft. There is the imputed income that's charged to an employee for using the company aircraft for non-business purposes, and that's called the SIFL imputed income, and we talk about that in other videos. Then there are the company deductions from entertainment flights. Those are the discussions and those are the rules that we will talk about today. The IRS rules require companies disallow aircraft costs, expenses, and depreciation from entertainment flights. Well, what does that really mean? Well, think about the fact that if we reduce expenses on our company's tax return, or our own tax return for that matter, taxable income is going to go up and we will pay more tax. So that is the consequence to the company for using their aircraft for entertainment flights. Simply stated, the more entertainment flights they undertake, the more tax they're going to pay. Reporting requires tracking every passenger on every flight leg to classify if that passenger is traveling for business, non-business, non-entertainment, or entertainment purposes. Now, the IRS rules permit four methods for allocating costs associated with entertainment flights. There is the occupied seat hour calculation method, occupied seat miles, flight-by-flight hours, and flight-by-flight miles methods of calculation. The taxpayer is allowed to use the method that works the best and results in the lowest tax. Entertainment use percentages are used to reduce income tax, expenses, and depreciation on the company's tax return. Regulations state that all of the costs of the entertainment flights are subject to the disallowance, including fixed costs, variable costs, costs that are only indirectly related to the flight, interest expense, and depreciation. And note that the regulations do not allow a charter rate alternative or industry statistics for the across-the-board general cost to operate an aircraft as an alternative for calculating the disallowance. You must use your actual company operating numbers, costs, expenses, and depreciation. An entertainment flight requires the presence of a specified individual. That includes officers, directors, and owners of more than 10% of any class of any equity security. It includes the company president, vice president, secretary, and treasurer. Also the principal financial officer, principal accounting officer or controller, vice president in charge of a specific business unit, and on and on. You'll see that covers just about any executive that's in a policy-making decision basis. Entertainment means any activity which is generally considered to constitute entertainment, amusement, or recreation. It is sort of a circular definition. It comes directly from the IRS regulations, and they use the term entertainment in the definition of the term. Entertainment is also an amusement or recreational activity, such as traveling to a sporting event or a vacation destination. An activity that is not directly related to or associated with the active conduct of a trade or business may be entertainment. And the IRS states that attending country clubs, golf and athletic clubs, sporting events, hunting, fishing, and vacations are all entertainment activities. Deadhead flights are flights with no passengers. Deadhead flights must be treated as passenger flights for calculating the occupied seat hour, occupied seat mile, or flight-by-flight passengers. Passengers are assigned and classified to deadhead flights according to the previous or subsequent flights. We talk a lot about deadheads and how you calculate those in our hour-long webinars, and you can go to our website and see the schedule for when our next webinar on entertainment cost disallowance will be presented. Now, there are interest expense rules, and regulations provide two debt allocation methods to determine which interest expenses will be allocated to the entertainment disallowance. Interest is either secured by the aircraft or interest is properly allocated to the aircraft. The first definition relates to a loan that is specifically directed towards financing the aircraft and where the aircraft is collateralized by the loan. Interest that is properly allocated to an aircraft under the interest tracing rules could be interest that is from a line of credit. Interest tracing rules are complex, and buyers should obtain guidance if purchasing an aircraft with a line of credit. Here are some additional provisions and concepts. Similar aircraft may be aggregated to minimize cost disallowance, and SIFL income or passenger reimbursements will reduce that disallowance. Use of time sharing and Schwab agreements may reduce the entertainment disallowance, and the taxpayer may use straight-line depreciation for the disallowed portion of depreciation. Disallowed depreciation is added back to the basis of the aircraft at the time of disposition. Flight tax systems provide complete aircraft tax reporting. It is software that is designed specifically to track the rules relating to the use of aircraft for business and non-business purposes. In addition to SIFL and company entertainment cost disallowance, flight tax systems prepare state tax reports and other reports related to tax on business aircraft. Flight tax system is used by aircraft owners, pilots, flight departments, and professionals. And you can go to flighttaxsystems.com for more information. Thank you for watching. I'm Jed Wolcott, and that's how it works.